Hi, I'm Scott Starratt with Starratt Wealth Management. So this is part one of a two-parter for this month. Part one's going to deal with more about what's going on with the war in Iran, as well as some market activity. Part two is going to discuss more around the idea of AI and some of the advances and some of the things we're watching there. So to start with on part one, Iran has been definitely the talking point in the event of the globe for the month of March. We've had a lot of market volatility, primarily because of this, and almost everything else has been set to the sidelines as far as any other concerns that are out there. One of the biggest concerns that a lot of people have is the idea of stagflation. So stagflation is a nasty event where you have inflation, but you also have low growth. And so that means that it's very difficult for central banks to increase interest rates without choking off the economy and causing a recession. So it's still way too early to tell whether we're going to be into a recession globally or not. You definitely have a disparity going on where you had the equity markets in March that have been quite weak, but not weak enough that you would consider it to be a big crash or a buying opportunity yet, although it is something that we're watching. As you know from previous videos, we have kept a fair amount of liquidity in client portfolios to ensure that we do have money available to take advantage of any downturns. I'm not getting too excited about the opportunities yet because, like I said, the market isn't down to the point where we would consider there to be a lot of great opportunities. The other thing is we have had a significant change with oil, which I'll get to here in a second. Surprisingly, and probably the most surprising thing has been the idea that gold has underperformed. Traditionally, gold has been an asset where when there is world or global uncertainty, that gold goes up in value. And we definitely haven't seen that. As a matter of fact, we've seen a drop. Some market commentators have attributed this to the fact that investors may have gotten offside with some of their other positions or some of their other trades. And so they're using their gold assets because it is so liquid and they've made a lot of money on them, using their gold assets to kind of offset some of the losses that they've seen in some of the other investments that they have. Time will tell there. Honestly, we're at this point not that concerned about gold weakening significantly further, primarily because of the demand factors that drove it upwards are still all there. And so going back to oil second, everybody watches the West Texas Intermediate or Brent. Now, of course, there are many, many other types of variations of oil. I mean, Canada, we have Western Canada Select. There's oil out of Mexico. There's oil all over the place. So, we all watch and see what happens with the price of oil. But the reality is now is that we're hitting a period of time where although there was a lot of oil in tankers sitting throughout the world on the oceans, and a lot of those tankers are now getting to their ports, and so they're going to offload that oil, and of course that helps a lot of countries and a lot of areas ensure that they have enough supplies. The issue is, though, is physical demand. So if you can't get the oil, or you can't actually get tankers coming through the Strait of Hormuz to deliver more oil, then you're going to end up in a tough situation. And you've seen that happen in particular with jet fuel in Asia, whereas last week the price of jet fuel was over $220 a barrel in some countries. So that becomes a real problem. So it's less about the paper West Texas Intermediate and Brent that we see in the news. And it's more about the actual having physical barrels to deliver. And like I said, the longer that this goes on, the longer that there is impacts to the energy sector, the more risk there is that there's a significant energy problem, and that problem lasts a longer time. And so that's one of the reasons why, as I said just earlier, that we're still waiting to do any purchases or use some of the liquidity, is that things can get a lot worse before they get better. Now, the question you get obviously asked is, well, if there's a risk of things getting worse, why wouldn't you just sell a whole bunch of things and sit on the sidelines? And although that might be a good situation in the short term, the reality is there could be, very quick fixes quote unquote, to this issue. Trump could basically come out and say, or actually sign a peace deal. And that would mean markets would most likely shoot up, oil could drop down, and you'd be in a situation where you're sitting a whole bunch in cash and missed a whole bunch of upside. And so, like I said, right now, and what's worked really for the last little bit has been a balanced approach. So, client portfolios continue to have a good exposure to commodities, of course, energy being a part of that, and also having exposure to other areas. And like I said, ensuring that we have enough liquidity in the portfolio. The last thing I'll mention about the energy is that it's not just energy. A lot of other products are coming from that Middle East area of the world. And so what we've seen and we continue to see is a lot of other impacts, fertilizers, things as simple as helium. And helium's used a lot for the making of microchips and a lot of technology processes. And so the longer that there's impacts to trade, the longer it is that the world will take to recover, and the more risk of there being significant shortages of different products throughout the world. So for right now, we continue to watch. We continue to make sure that everything is balanced. And like I said, for client portfolios so far this month, we are in a situation where things are in reasonably good shape because of that balance that we've had. We are getting into tax time of the year, so most of you will have already received your checklist or will be receiving your checklist and tax slips here very, very soon. As a reminder, issuers have until March 31st to issue all their tax slips, and we'll get them out to you as soon as possible after that. I would expect everybody should have their tax slips by the second week of April at the very, very latest. Like I said, some of you have them all already. Before you do file your income tax, please have yourself or your accountant reach out to us if you're at all uncertain as to whether you have all your tax slips or not. We would rather reach out to us and we let you know or get you another copy rather than you having to file an amendment a month or two down the road. That is all I have for now. Like I said, more than happy to chat. Any questions that you may have about what's going on out there with Iran or other topics. Again, we're always around to take your questions. Just give Jim, myself, Angela, or Alex a call, and we're more than happy to chat with you.